Welcome to the Deep Dive, where we take the sources you send us, the filings, the research, all of it, and build out a comprehensive market thesis.
Yep.
Today, we are zeroing in on Rubrik Inc. That's ticker RBRK. They're a big player in what they call security and AI operations.
That's right. And our mission today is pretty clear. We're going to unpack their latest financials, that's Q3 fiscal 26, plus their big strategic documents.
All to really understand, what is this company's core business? What are the risks, especially with this big SaaS transition they're doing?
And, of course, where the opportunities are. We want to cut through the jargon.
Exactly. And before we dive in, we have to do the standard disclaimer. This is purely for informational purposes to help you get up to speed quickly.
Right. This is absolutely not financial advice.
Please do your own homework before making any investment decisions.
Okay, with that out of the way, thank you for tuning in. Let's get into it. What makes Rubrik tick?
Okay, so let's start with that core thesis. Rubrik's whole identity is built around this idea of zero trust data security. That's a huge kind of buzzy term. What are they actually selling?
Well, they're selling resilience. The whole idea of zero trust in this context is that you just assume your infrastructure is going to be compromised.
So you assume the bad guys are already inside the gates.
Precisely. The network, the servers, all of it. So Rubrik's solution is all about making sure the data itself is secure and, maybe more importantly, that you can get it back instantly after an attack.
And the main tool for that is the Rubrik Security Cloud, or RSC.
Exactly. Think of RSC as like a unified shield. It's one single platform.
Okay.
And it's not just for security. It's also for governing the data and recovering it no matter where it lives.
Yeah.
On-premise, in the cloud, even in SaaS apps like Salesforce.
So they're chasing the data wherever it goes.
They have to. Data sprawl is just a reality now.
So their business model is that classic land and expand strategy. They get a foot in the door with one data type.
Right, like private cloud or maybe some SaaS apps.
And then the revenue just grows from there. Why does that work so well for them?
Because data just grows and grows. It's exponential.
Right.
So once they land a customer, they can expand in like 3 different ways.
There.
First, the customer's data grows, so they need more protection. Second, the customer starts backing up new applications on the platform.
And third is probably cross-selling new products.
You got it. And the source material really backs this up. Their average subscription dollar-based net retention rate was 133%.
Wow, 133%. So on average, existing customers are spending a third more this year than they did last year.
Yeah. I mean, that's a really powerful sign that the product is sticky and that the expansion plan is working.
And that leads right into their next big push, which is AI.
Yeah.
It's not just security anymore, it's AI operations.
Right. They're trying to build security directly into how companies are going to adopt AI.
So let's talk about these 2 new products, Rubrik Agent Cloud and Annapurna. They sound like they're solving problems that, we don't even really have yet.
Well, that's the bet, isn't it? That's what the CEO, Bipul Sinha, is talking about. Agent Cloud is basically a defense system for AI agents.
For the bots that companies are going to use to automate tasks.
Exactly. And those agents are going to make mistakes or get hacked. Agent Cloud monitors them, audits what they do, and gives you an undo button.
An undo button for enterprise AI. That's actually a really compelling idea.
It is. Then you've got Annapurna. That's an API service. It's designed to help their customers build their own GenAI app safely.
How does it do that?
By providing what are called secure data embeddings. It's the clean, structured data you need to train a model. So Rubrik wants to be the secure foundation for AI, not just the cleanup crew after an attack.
That focus on the foundation makes sense. Let's shift to the leadership. We've got the co-founders, Bipul Sinha as CEO and Arvind Nithrakashap as CTO, still at the helm.
And that's a big advantage, that co-founder stability. Their commitment to moving fast is also really clear, not just in R&D, but in how they're growing the company.
You mean like acquisitions?
Yeah. Look at the Laminar acquisition back in August of 23. They bought this data security posture management platform, a DSPM platform.
And that wasn't cheap. It was, what, $105 million? All to speed up their cyber posture offerings.
It shows you where their head is at. They want to merge cyber recovery with posture management.
So posture management is knowing what data you have and who can touch it.
Exactly. And when you combine that with their recovery tools, you get this single, unified solution. It's that relentlessness and velocity they talk about in their company values.
Speaking of rigor, I saw a huge regulatory win for them that could open up a massive new market.
Oh, you mean the FedRAMP authorization? Yeah, that's a big deal.
So their Rubrik Security Cloud for Government got the green light at the moderate impact level.
And sponsored by the National Nuclear Security Administration, no less. I mean, getting FedRAMP authorization is the gold standard. It's your ticket to sell to the entire U.S. federal government.
It's about as strong a validation of your security as you can get.
It really is.
Okay, let's get into the numbers. Q3 fiscal year 2026. The company headline was, they exceeded all guided metrics.
And it was a very strong quarter. Subscription annual recurring revenue, or ARR.
That's the key one, the predictable revenue.
Right. That grew 34% year over year, hit $1.35 billion. Total revenue growth was even more dramatic.
How much?
48% year over year. Came in at $350 million.
And their customer base looks strong, too. They now have over 2,600 customers paying them more than $100,000 a year in subscription ARR.
Which is up 27%. So that shows they're successfully moving those smaller accounts up into becoming really high-value partners.
And what about cash flow? Is the model getting more efficient?
It really is. You can see the leverage starting to kick in. They generated over $76 million in free cash flow in the quarter, and their subscription ARR contribution margin improved to 10%.
And what was it before?
It was -3% in the prior year period. So that's a 13-point swing. It shows the business is maturing.
Okay, now for the reality check. The part that's always important for anyone learning about a growth company, the GAAP numbers.
Right.
I'm seeing a -32% operating margin and a -31% net margin. On paper, that looks pretty concerning.
It does, and we have to talk about that distinction. For these high-growth software companies, GAAP accounting can, it can hide the operational progress because of non-cash expenses.
Like stock-based compensation.
Exactly. So if you strip that stuff out and look at what they call non-GAAP operating income,
Yeah.
the cash profitability, the picture totally changes.
And what does that picture look like?
They reported positive non-GAAP operating income, about $10 million.
So if you ignore the stock options and some other accounting items, the day-to-day business is actually making money now.
Precisely. That's a huge milestone. They crossed into operational profitability on that adjusted basis while still keeping this exceptional 79% gross margin. It's the classic growth story playing out.
But that kind of growth, that kind of transformation, it doesn't happen without some serious challenges. Let's pivot to the risks.
And the biggest one seems to be internal. It's tied directly to their success with the RSC platform.
This is the transition away from the old model.
Yeah, it's that classic flying the plane while rebuilding it problem. They're moving from older term-based licenses, which let them book some revenue up front,
Okay.
to the pure SaaS model, where revenue is recognized smoothly or ratably over the life of the contract.
So just by changing the accounting, your reported revenue growth is going to slow down or get lumpy, and they're saying that could last through fiscal 2027.
Exactly. And they even mention the risks of pushing customers too fast. They talk about enforcement of migration deadlines.
Which they admit might be perceived negatively by customers. That sounds like a very fine line to walk.
It is. You push too hard, you might lose a customer you were trying to upgrade.
I also saw a supply chain risk. They rely on a pretty small number of manufacturers, right? Specifically, Supermicro Computer.
Yep. And their agreement with Supermicro is up in November of 2025, so that creates a dependency. And it makes forecasting demand for their physical servers really tricky.
If they guess wrong, they either have higher costs or they can't deliver to new customers.
It's a real risk.
And what about just pure competition?
Customer lock-in is a huge factor in this space. Once a company has a data management system in place, ripping it out and replacing it is a massive, costly headache.
So it's a big barrier for Rubrik to overcome, even if their product is better.
It is. And then there's the ultimate irony.
The security company getting hacked.
Exactly. A breach of their own systems would be, as they put it, especially detrimental.
Of course.
Yeah.
But to counter that, they have that ransomware recovery warranty. They'll pay up to $10 million if they can't recover your data.
Which is an aggressive guarantee. And the good news for them and their customers is that as of the last report, they haven't had to pay out a single claim.
That's a pretty powerful data point.
Uh-huh.
So let's end on a positive note. Let's talk about their moat, their competitive advantages. What makes them stand out?
Well, it starts with that zero trust architecture. It's not just marketing. They build in things like native immutability and a logical air gap.
Meaning the backup data is isolated and can't be changed, even if the main network is on fire.
You got it. The security is at the data layer itself. And then the second piece of the moat is the data threat engine.
That's their AI play.
Right? It uses machine learning to spot weird activity, find new threats, and then it can help orchestrate a fast recovery without accidentally reinfecting your system with malware.
They're also building out that moat with partnerships like the one with CrowdStrike.
Yeah, that partnership led to the Rubrik Okta recovery product.
Okay, so that protects identity systems.
Right. Okta and other identity providers are huge targets for attackers. So by offering an immutable backup for that specific environment, they're plugging a really critical hole for customers.
And the market they're in is just getting bigger and bigger, right?
Oh, the tailwinds are massive. Gartner thinks their addressable market for things like application security, cloud security, is going to grow from about $23 billion this year to almost $38 billion by the end of 2027.
So they're in a very good neighborhood.
A very fast-growing one. And I think you have to mention their customer support as part of the moat, too. They have this AI platform, Sentry AI, that monitors system health.
And that free 24/7 ransomware recovery team.
Yeah, they're basically selling confidence. When the worst happens, you have a team of experts on call. It really reinforces that brand promise of resilience.
So to wrap this deep dive up, what we've looked at with Rubrik is a company that's in the middle of a big, successful transition to SaaS. They're delivering really strong growth, like that 34% jump in subscription ARR, and they're innovating like crazy at this intersection of cyber resilience and AI.
I think their future success is basically tied to two things. The nonstop explosion of business data worldwide, which creates the need and their ability to keep expanding their platform to protect it all.
Which brings us to our final provocative thought for you to think about. Rubrik is using generative AI inside its own walls to speed things up, like for writing code, which is a process that can introduce new security risks. At the same time, they're selling these advanced AI-driven security products. So how will that tension, the push for speed using AI versus the demand for perfect zero-trust security, how will that tension define the reputation and reliability of the next generation of cybersecurity companies?
A fascinating paradox for the modern enterprise to navigate.
Thanks for joining us for the deep dive. See you next time.